Everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 21st of February, and hope you had a good week. The market didn't so much. We lost ground pretty much across the board. The biotechs were the standout, as well as the bonds and the volatility index. So let's take a look at the charts here and make some sense of it. The daily chart of the S&P 500, you can see we're still above a rising 20-day moving average. We're also above this prior little band of resistance, which did hold as support. So that 332 level becomes an important level that we want to see hold next week, but we don't have any confidence in it. I don't have any confidence in it. We can also see it's approximately a 38.2% retracement of this move from the February low to the February high. 38.2% brings it down right in that area. Looking at some VWAP levels that we've been referencing lately, you can see that the volume weighted average price from February, we are now right at it, and that level looked like it might have been a potential level of support, but we're below the declining 5-day moving average. That's the orange line, as I pointed out on Twitter. I've been looking at this, if you've been listening to my videos, for the last 15 years as far as really what I consider the best indication of intermediate term trend, which is where we are in relation to and the direction of that 5-day moving average. Right now, we're below the declining 5-day moving average, which tells me from an intermediate term standpoint, you don't want to be a buyer of the S&P 500, and you don't want to be a buyer of the NASDAQ either, because we're below that orange 5-day moving average, and we've broken below these volume weighted average price levels as well. If we take a look at the low from late January, you can see we're right on the 38.2% retracement, and we can put a volume weighted average price on there as well and see that it kind of comes together with the volume weighted average price off this prior peak. So this would be another level of interest. Right now, we're guilty till proven innocent. I don't want to be a buyer of the NASDAQ at potential levels of support. I want to see them hold as support and then maybe do very short-term day trades against those levels. But while we're below a declining 5-day moving average, it's guilty till proven innocent. Now, that's not going to get you in at the bottom of the next move, but similar to the last time we were below the declining 5-day moving average and where we got back above it and the buyers regain control over here, you don't have to buy at the bottom. Let other people do the dirty work of creating the support, and when it's evident that the buyers are back in control, then you want to get involved for holdings in the swing trade time frame, but not while they're below a declining 5-day moving average. We can look at potential levels all day long, but they're only potential support areas. Moving over to the Russell 2000, you can see this market's holding up a little bit better, but it really has been just a lot less volatile than the other markets. On here, on this daily chart, we can see the blue is the 20-day moving average, the green is the 50-day moving average, and that black is the year-to-date volume-weighted average price. So that puts a level of significance in this 166 area. Over to the 30-minute time frame, you can see here that we are below the declining 5-day moving average. So basically, I look at the Russell 2000 as just in a void. It's neutral. As an analyst would say, it's a hold if you own it, and just be aware of where your risk is. But don't add, don't make new purchases. The semiconductors, they've been very choppy. They are right on the year-to-date volume-weighted average price, meaning the average price paid for the semiconductors this year is right here. So it's just kind of showing us, even though we're up year-to-date, that we're really kind of going nowhere. The 20-day moving average is starting to roll over a little bit. We've got a rising 50-day moving average, and of course we can look at what's been an important trend line, and sometimes it passes through that trend line. It doesn't have to be an exact perfect touch, but this is kind of like the band of upward support as far as a trend line goes. If you listen to Larry McMillan, he always says draw it with a crayon, not with a sharp edge. So this is clearly 144, 145 at a level of interest for the semiconductors. And the biotechs, as I said, these guys held up the best. They're kind of trading in a range here. They were positive on the week. We're above the rising 20 and 50-day moving average. We're above the year-to-date VWAP. Over to the 30-minute time frame, kind of neutral in here. Now, I got bullish on them over here because we had broken to a new, we'd broken resistance, and we're still holding above this level. Back below this level for now, I'm going, back to neutral-ish on the, going into cash on it and back to neutral on the daily time frame. But I think that the biotechs have are set up the best, at least right now, in this, in these indices as far as potential upside, but it's just not, it doesn't seem like there's much conviction behind them right now, so you don't want to be too aggressive. The financials, you can see that we've been kind of slogging back and forth above and below this 5-day moving average, but now we've broken below it, and we have a lower high and lower low below the declining 5-day moving average. So intermediate term says they're guilty till proven innocent. The daily time frame says we're in a level where they might be guilty till proven innocent on a shorter term time frame, but we're not going to short here because we're at this important level. So again, neutral on the financials. There's just, basically no edge. You don't have to have a position in the financials, is my opinion. When they're neutral, you just leave them alone. Let's take a look at some of the stocks I've mentioned on Twitter this week. I've mentioned just today that Amazon, for the first time since this gap, since the earnings, we're seeing a hard test of the volume weighted average price. Now, we're below declining 5-day moving average. I'm not suggesting buying, but they often bounce from here. I think next week it's likely to see that Amazon runs back up towards that 5-day moving average. But then what happens in there will be very important as far as, is it going to break down and close this gap, or is it going to be able to right itself in here? The primary trend is still clearly higher, but we're at a level of significance right now. I had mentioned Space, SPCE. I'm sure a lot of people were looking at this stock, and on Thursday, I pointed out this volume weighted average price from this gap. Right as it was touching it, I think it was $30.70 when I had mentioned it, and within a couple hours it ran over 20%. This is why you want to look at what's the direction of the 5-day moving average and where are the key volume weighted average price levels. Now, overall, Space is showing a lot of volatility here, and it's really, you've got to be in the moment to trade a stock like that. I did mention APPN recently, as far as this is a stock that we had gotten long at Alpha Trends right in here on the daily time frame. Right here, we had taken a third off as it went right here, and then I had suggested taking more off as it hit this so-called breakout level. A lot of times when you see a breakout, a lot of people say, hey, breakouts don't work. I don't buy breakouts because they don't work. Well, you have to ask yourself, where has it come from? When the stock has run from this year $38 to $63, and then you're buying a breakout, you're clearly chasing a move. That's why I suggested, on Twitter on, I think it was Wednesday, selling some up here on this breakout. And then I suggested selling the rest of it yesterday because they had earnings due. And what was a really nice trade from 54 up to 63 and 62 turned into what have been a losing trade had you held through those earnings. So always risk management is job number one. I say it constantly. FLIR Technology, this one is looking good. It's a stock that, despite the market maybe being a little bit weak, it broke beyond a key level of resistance that's been in place for pretty much a full year, and it broke on the daily time frame. We can see the increase in volume right here down below, and then as it's consolidating, we see lighter volume. Today it was up on heavier volume, so this looks like as long as it remains probably above this low, the buyers remain in control of the trend in FLIR. Now, here's what I was looking at on a shorter term time frame. The volume weighted average price from this gap and from that peak, you can see we're crossing back and forth above and below it. And again, it looks to me like this is your worst case stop scenario. Personally, I'm more comfortable with a stop in this area. But, as always, I don't tell people what to do other than do what's right for them. I had mentioned Peloton looked like it had the potential to rally up towards 27.75 and then fall apart, and that's exactly what we're doing in Peloton. The key here for the reasons I'm bearish on this stock I had laid out is that the volume weighted average price from the IPO held as resistance and then support, and then we had broken below it. We're also below the declining year-to-date volume weighted average price. That's the black one. This purple from the peak, below a declining 20-day moving average, below a declining 50-day moving average, and that puts the sellers back in control. So this is what I had sketched in as a potential scenario, is to rally up towards the 5-day moving average. You see that we came very close to it yesterday, and today we completed that breakdown. So clearly, if you're short in here, that's the right thing to do. Personally, I would suggest to stop just above this lower high, but do what's right for you if you're involved in it. KNX was another one. I'd suggested looking at this one. I said it's not my personality, because look how choppy this daily chart is. You have to understand not only your personality and the stock's personality, but do your personalities make sense? Is there a match here? You're getting into a relationship with a stock, and your personalities have to match. Otherwise, you're going to drive each other crazy, like any relationship. For me, I look at this and see all this choppy action. Plus, you know, and by that I mean all this choppy action. It still looks like a decent looking stock on the weekly time frame, but I have no interest in it. I don't care if it goes up to $45 per share. It doesn't suit my personality. I'm not going to date every person just because they have a good face. You have to get along with them. I'm married anyway, so I should just end it right here. Have a good weekend. Thanks for listening.